Alright, in this video I'm going to answer the question if Micron Technology stock is a buy right now. Stay tuned till the end because you're going to get the answer to that question. Let's get right into it. The first step in my framework looks at the customer value, and for Micron, revenue has increased from 9 billion to 31 billion between 2012 and 2021. So it looks like folks like what they're offering and they keep buying their products and their products continue to be used, and that's evidence that they're providing good customer value. Micron Technologies is primarily in the business of designing and manufacturing dynamic random access memory, or in other words DRAM, and NAND flash memory chips, mainly used in computers and mobile devices, things like that, for memory and processing. Micron got a net promoter score of 13, which if we look at the scale here is a good score. It's not great, it's not excellent, but it's not terrible either. It's got a good score. For unit economics, Micron averaged a gross profit margin of 35% and an operating profit margin of 20% in the last decade. Those are pretty good margins for a hardware company. However, near-term headwinds arising from excess inventory levels industry-wide and a slowdown in end customer demand is expected to pressure margins over the next 2 to 3 quarters. So don't expect to see good margins from Micron over the next few quarters, even though longer term their business generates good and healthy profit margins. The next step in my framework looks at the total addressable market, and Micron anticipates a 14% compounded annual growth rate for the total addressable market of DRAM and NAND flash chips in data centers through 2030. So that's healthy growth that the company can experience over this next roughly a decade. Even if the company does not gain any market share, if it just stays flat with the market, it can grow at double-digit rates over this time, and that's good growth for investors. The next step in my framework looks at competition, and production of DRAM and NAND memory are relatively similar industry-wide, meaning there's little differentiation between suppliers. They are what they are. The brand doesn't matter all that much. This means that pricing is primarily set by supply and demand dynamics. In other words, Micron cannot flex pricing power and say, hey, look, these are Micron branded chips and we're asking you to pay more for these. They wouldn't be able to get those kinds of prices. Their buyers would just switch to another provider and pay whatever the going market price is. But thankfully, competition in this industry is mainly based on executing strategy, process, and research and development effectiveness. And so, how good are you at delivering these products at the lowest possible prices, right? So if the market price, if you're not able to earn a higher market price, right, then how good are you at producing these items at lower prices and therefore to earn a higher margin? So to earn a higher margin, you've got to be so good at your process, at executing your strategy to supply the market at lower prices than the going market price. So this is where competition is based. It's based on how good are you at executing, not how good are you in your marketing to earn higher prices for your products, as might be the case in other industries. That's not the case here for Micron. And thankfully for investors, if you look back at Micron's previous decade, it has shown evidence that it can execute, it can deliver their products to the market at a low enough cost to earn healthy profit margins. The next step in my framework looks at valuation, and Micron Technology stock, looking at a price to earnings ratio, is relatively cheap, trading at a PE of 7.5. It's almost as cheap as it's ever been going back to before 2014. Investors have rarely had a chance to buy this stock at a lower valuation. Of course, there's a reason for this, and that was what I mentioned earlier. The oversupply in the industry is going to pressure profit margins over the next 1 to 2 quarters at least, and maybe even 3 to 4 quarters. And so knowing that earnings are going to come down over the next 2 to 3 quarters, investors have brought down the valuation of Micron stock. You see, it was trading at a PE ratio over 30 earlier in 2021, and that's come down to 7.5. And so this might be an opportune time for valuation here in Micron Technology stock. And as I mentioned earlier, uh, the final step in my framework is risk, and the main risk I've already mentioned is the massive oversupply of DRAM and NAND products in the market that are causing prices to fall by more than double-digit percentages year over year. And these headwinds are expected to persist for at least the first half of 2023, of calendar year 2023. And so their prices have already come down double digits. It could come down further if these inventory excesses don't go through as quickly as anticipated. Prices could come down even more. Micron management has already slashed production plans for 2023 in an effort to work through some of the excess inventory. They're not producing very many new products, trying to get through what they already have on hand. All right, now that I've looked at each step in the framework, let's give Micron a grade here. Customer value, I gave them a B plus here. They've delivered their products. They've been good at what they're doing. They've been reliable. Their products continue to be used. Their suppliers continue to come to Micron. That's evidenced by continued revenue growth and a good score on the NPS. So B plus there. Unit economics, I gave them an A minus. They've got excellent profit margins. However, the near term is pressured, so that's why they get an A minus here. Total addressable market, they get an A plus. They've got a massive market opportunity that continues to grow. Double-digit market growth dating going all the way to 2030. So that's a nice long runway of double-digit growth. A plus score here. Competition, I gave them a B minus. The relatively similar nature of the products in the industry means that they cannot differentiate themselves, and they need to compete on execution, which they have done a good job here. But the fact that the industry is one where there is little differentiation lowers their potential. Even, the highest score they could get here, I would say, would be like a B plus, maybe an A minus if they're really, really good in their execution. But the industry itself is not one that proves itself to a good competitive environment. And similarly, risks, I give them a C minus. The elevated inventory levels industry-wide, and the fact that even competitors and all industry participants expect this to persist for at least the first half of 2023 is not good news. We don't know how deep the price declines will be, and so the near term and high probability of these headwinds is a major risk here for investors in Micron Technology stock. So I gave it a C minus here. But to offset that, it's an excellent valuation. Their stock is trading at, arguably the lowest valuation it has been going back to several years. And that could be because everybody knows that the industry faces heavy risks, heavy headwinds in the first 2 quarters. And so the stock is cheap because of that. So you could say that the risks are priced in. You could say that, and you would be making a valid argument there. So for valuation, I gave Micron Technology stock an A. Okay, so now it's time to answer the question if Micron Technology stock is a buy right now. But before I do that, I would like to recommend that you subscribe to my channel, because this recommendation is going to be changing over time. You're going to want to be subscribed to the channel to get these updates and know if it changes from one to the other, right? So those are updates you're not going to want to miss out on. So go ahead and hit that subscribe button right now while I move to the next slide and answer the question, is Micron Technology stock a buy right now? The stock is a buy right now. The company has an excellent history of showing it can execute, delivering innovative products to the market at a low enough cost to earn itself a healthy profit margin. And the near term risks are arguably priced in, or some of those risks are arguably priced into the stock. It's trading at the cheapest it's traded for, arguably in the last 5, 6, 7 years. And so, to offset those risks, you get the stock at a low price. And then longer term, the company has proven itself as an innovator, as a company that can execute. And so this might be an opportune time to buy Micron Technologies stock. It could be an excellent time to buy the stock. So yes, the stock is a buy right now. All right, so thank you for watching in this installment of Is This Stock a Buy? And if you've subscribed to my channel, I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.